Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit and Equities. In this video, we'll be talking about 3 holding companies which are insanely cheap and are trading at huge discounts, which make them very attractive bets. Now in India, it's common for holding companies to trade at about 30% discount. However, these stocks are all in excess of that, and this is what makes them very attractive. Friends, we have also recently created another channel where we will be sharing our views on items other than stocks. The link to the new channel will appear at the top of the screen. Please subscribe to the channel to get more such insights on topics other than stocks. Please watch this video to know more. Now the first stock on the list is Bajaj Holdings and Investments Limited, which is available at Rs 3,364.00 and the face value for it is 10. The symbol for it is BAJAJHLDNG. Now Bajaj Holdings and Investments Limited is an India-based holding and investment company focusing on earning income through dividends, interests and gains on investments held. The company's other equities portfolio is a combination of listed and unlisted investments. Now Bajaj Holdings has several fast-growing companies under its umbrella. It has direct investments in Bajaj Auto and holdings in Bajaj Finance, Bajaj Allianz General Insurance and Bajaj Allianz Life Insurance through Bajaj Finserv. Consumer durables finance penetration is only around 20% and Bajaj Finance has around 70% market share. Despite strong growth in the past 5 years, Bajaj Finance's loan book should grow at 32% CAGR over FY 2018-19 to 2020-21, says a recent Jefferies India report. Its unlisted subsidiaries, Bajaj Allianz General Insurance and Bajaj Allianz Life Insurance are also doing well. Given the performance of all its subsidiaries, the 48% discount to net asset value is not justified. Looking at the 1-year chart, the company has been on a beautiful uptrend, save a steep decline during the middle of the year. However, there was a V-shaped recovery thereafter. The company is a large cap with a market capitalization of 37,439.14 crores. The EPS of 86.81 translates into a price to earnings ratio of 38.75, which is largely in line with the industry PE of 38.10. The price to book ratio of 4.56 is however on the higher side. The company has a dividend yield of 1.19%, whereas the promoter holding is just below average at 46.41%. Also, none of the promoters holding is pledged. Now the second stock on the list is Grasim Industries Limited, which is available at Rs 817.65 and the face value for it is 2. The symbol for it is GRASIM. Now Grasim Industries Limited is a holding company with segments including viscose staple fiber and wood pulp, cement and chemicals. Now since the domestic demand for VSF continues to be robust, the standalone business of Grasim is also doing well. While its revenue for the third quarter of 2018-19 grew 21% year-on-year to Rs 5,293 crores, its net profit grew 28% to Rs 608 crores. The outlook for its standalone business remains robust. While its discount based on listed subsidiaries is placed only at 37%, this does not consider its booming standalone business. Even at a PE of 8 based on last year's standalone net profit, this division should be valued at Rs 14,000 crores, which will take the discount to 46%. While most of its subsidiaries are also doing well, there is concern about its loss-making subsidiary, Idea. However, Grasim's Idea holding has come down to 11.55% after the telco's recent merger with Vodafone. Now, the company is a large cap and as is evident from the 1-year chart is not really done well. The company is available at a price to earnings ratio of 40.10, which is much more expensive when compared with the industry PE. However, the price to book ratio of 0.9424 is pretty cheap. The company has a promoter holding of 39.03%, whereas none of the promoters holding is pledged. The final stock on the list is Godrej Industries Limited, which is available at Rs 534.80 and the face value for it is 1. The symbol for it is GODREJIND. Now Godrej Industries Limited manufactures fatty acid, fatty alcohol and surfactants. The company's segments include chemicals, animal feed, veg oils, estate and property development, finance and investments and others. After the listing of Godrej Agrovet, Godrej Industries has almost become a holding company because it generates major value from its listed subsidiaries and associate companies. However, the business of the parent company, which mostly deals in chemicals now, is not negligible. It generated revenue and net profit of Rs 573 crores and Rs 50 crores respectively during the third quarter of 2018-19. As it has several unlisted subsidiaries with 100% holdings, the actual discount is much more than the calculated value of 45% computed on the basis of its listed subsidiaries. Now looking at the 1-year chart, the company has not been an outperformer and wealth has been eroded here. The company is a mid-cap with a market capitalization of 17,989.84 crores. The EPS of 12.90 translates into a price to earnings ratio of 41.20, which is much more cheaper when compared with industry PE of 67.78. The price to book ratio of 5.1334 is also slightly on the high side. The company has a dividend yield of 0.33%, whereas the promoter holding is a decent number at 61.33%. Also, none of the promoters holding is pledged. Now friends, having watched the 3 stocks, please don't consider these to be recommendations on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.